So we're going to go ahead and get started. Thank you so much for joining us today for our mortgage question and answer webinar. My name is Jennifer Young and I'm here with University Credit Union. And joining me today is Taylor Riley. He's one of our mortgage consultants from the Brickyard branch. And so we're just going to dive right in and encourage you throughout the presentation. I'm going to encourage you to type in your questions. This is all about answering questions that you have. We do have some overall general information that we'll present, but we want to make sure that we're answering the questions that you have. So make sure and type those in as we go through. We've got a couple of things that will help kind of spur some of the questions that you might have, but we're going to go ahead and get started with our first question. And the first question that we've been presented with is, how do I know which product I need? So I'm going to have Taylor address this. Taylor, how do we know what products?
Well, the first thing that we do, or that I do when I sit down with somebody, is I'll go through a series of questions and see what they're trying to accomplish, what their short-term and long-term goals are. So I will go through and ask them, first of all, what kind of credit score that they have and what kind of credit history that they have, so that we can be able to make sure that we're staying on the right track. If somebody has a credit score below a 700, usually an FHA loan is going to be the better option. So it just starts us down the path that we need to go down, so that we can be able to find the right product for you. We talk about down payment. We talk about job history, what kind of income you have, so that we can be able to find out what kind of documentation we need. Whether you're purchasing a home for the first time, whether this is your second home, if somebody else on the loan is going to be a first-time home buyer, it really opens up the type of products that are available for us, so that we can be able to discuss your financial goals and find out what you're trying to accomplish. Sometimes if people are heading into retirement, we can be able to utilize our no-fee loans that are on the shorter term. So we really just go through a series of questions to be able to find out exactly what product is going to work best for you.
Great. Question came in about how long does the process take? How long does it take from starting the process to go through?
Yeah, if you're during a purchase, we've been able to get purchase done in a 15-day window, as short as typically I see most purchase contracts are written 24, 25 days right now, but I mean, we can be able to go in a faster timeline. Our refinances take a little bit longer just because the purchases take precedent. However, the time frame for the refinance is a very, very short time frame as well for us to be able to get everything done for you. So I think within 30 days, we should be able to get everything finished on any type of loan. However, if you have special circumstances and we need to get something done in a faster amount of time, we always can be able to take a look at that, because there are times where we can be able to get stuff done much quicker than the 30-day window.
So that's great information. That's great, and that's a great question. There's a lot of times that we run into, how do you compare lenders? So we're going to cover that. When you're looking at lenders, we really want to make sure the number one thing on this list that we look at is trust. We really want to make sure that you understand we're very transparent with the information that we're presenting to you. We want you to feel comfortable and understand the information that's being presented, the information that's being looked at and evaluated. And we at the credit union, we're not just looking at doing just your mortgage. We really look at it as an overall relationship. We're looking at being able to help you not only with your mortgage, but help you with your car loan, maybe get you a better deal on your car loan rates, put you into the best visa in the industry. I'm totally biased. I think we have the best visa out there. So, but we're looking for an overall relationship. This isn't just a one-time deal for us. And we want to make sure that you understand that and that you recognize and see the value of that. Our rates and fees are very competitive with the market, and hopefully you'll see that. And if you do get an estimate from someone else, please give us the opportunity to evaluate. We are all willing to go to fight for you, and we'll take it to the executive team and fight and see what we can come up with for you. But as an industry standard, our rates and fees are typically very competitive with what's out there. Our process, we've tried, as Taylor alluded to, we've really streamlined our process, and we push things through quickly and get them taken care of and try to avoid any hiccups or any slowdowns along the way. Taylor also mentioned, you're going to deal with a mortgage consultant that's going to give you that personal relationship. You're going to be involved with them through the whole process. They're not going to turn you over to someone and have somebody else take care of it. You're not going to get bounced around. You're going to deal with that mortgage consultant from start to finish. And so that relationship becomes, again, a part of the personal touch that the credit union offers. Servicing is a big deal. And so I'm going to ask Taylor to address what is servicing and why is it a big deal?
So the servicing aspect of the loan is where you're going to make your payments long term. The credit union on most loans will retain the servicing. If we're not going to, we'll talk to you about that. But those are typically VA and FHA loans. But the servicing aspect is where you'll just make your payments long term. We take care of your escrow account. If you do have an escrow account, we can answer any questions for you. We really can be able to go through and just continue the relationship that we had in the first 30, 45 days when you got your loan completed. It's not something where you'll get a letter and then you never have any more contact with us. I always give my members my cell phone number. They're more than welcome to text me, call me, email me. And most of my calls that I receive are from my past members with questions that they have, anything that we can be able to get them taken care of. So we really become a source of contact and a relationship that we can be able to continue to help you with, not only with this type of banking, but all banking avenues.
Okay, and then the accessibility. There are many different things that we try and do to make sure that we're easily to get to. You found us on our internet site, our website, and you can also do applications for your mortgage on that site. We also make sure that you've got, we reach out at any of our branches. The mortgage consultants are located at 8 of the different branches, but we will travel to any branch to make sure that we're easily to access. We try and make it as simple as we can for you and as user-friendly for you. So those are some things to compare. Again, I would pick, I guess my personal opinion is the most important is the trust. Make sure that you understand and know going in and that you can trust the information that's being presented and that you know that it's accurate and that you're comfortable in how that information is being presented. So I'm going to go to the next one. So a question that came in, we're going to answer just a couple of questions really quick. Do I need great credit, Taylor? Do I need great credit to get a mortgage?
Well, I wouldn't know what great credit is, so I would always ask a question of, what would you consider great credit to be able to get the mortgage? The overwhelming answer, though, is no. I mean, we can be able to do FHA loans as little as a 580 credit score. We do have specialty programs that sometimes can be a little bit less than that, but you don't have to have perfect stellar credit to be able to qualify for a mortgage. If you have any questions on a mortgage or are thinking about getting a mortgage, just come and talk to us and we can be able to see where you're at. If you're not up to the amount in credit score that we need at that time, most of the mortgage consultants and myself have years of experience in consumer loans, so we can be able to help you prepare to get your scores higher so that we can be able to get you to the point where we can be able to do a mortgage for you.
And we had a question earlier about bankruptcies. What kind of waiting period is there on, like, if somebody has had a Chapter 7 bankruptcy? How long do they have to wait? Can they get a mortgage right after they file the bankruptcy? Do they have to wait?
It depends on the type of bankruptcy. Like if it's a Chapter 7, 11, or a Chapter 13, they have different waiting periods, but they're different on each program. So FHA has shorter waiting periods than conventional loans. So we just need to go through and ask the questions and address those concerns that you have. There are times where we may have to say, hey, you're 9 months away from being able to qualify. But at that time, we can be able to evaluate the credit and say, okay, these are the things that I would do so that we could be able to get your score higher and get you better products and better pricing in the future. So there are waiting periods on those types of things, but that's something where we can be able to overcome those. In a worst case scenario, we at least know a time frame on when you can be able to qualify.
Great. So we do ask for a lot of documentation and we do ask a lot of questions, and that's part of the process of getting a mortgage. Is we're asking all of these different questions with the idea that we're trying to reach the end goal, and the end goal is to get you into a home with a mortgage that suits your needs. And so it does take asking for a lot of information and asking for a lot of documentation. This is just a small bit of what we verify. We do verify income. And in order to verify income, we're going to ask you for a lot of things. We're going to ask you for pay stubs. We're going to ask you for W-2s. If your income is structured different, if you're self-employed, then we're going to ask you for tax returns. And we're going to ask you for more documentation. Once we're able to evaluate that, we may ask you for more. Or it might be just a simple couple of pay stubs and a W-2 and we're done. But asking those questions and getting that information is part of the process of getting a mortgage. We verify residency. Residency is one of those odd things. A lot of lenders cannot do a loan for you if you aren't a resident, and we do have that ability to do. And that's something, again, I'm going to have Taylor address with the residency. This is a very important thing that we're able to do as a credit union.
So we found out that we're one of the only financial institutions who can be able to do a mortgage for somebody who has the N1, H1 visas. As long as you are living here in the United States legally and have a credit history, we can be able to do a loan for you. Even if your visa expires in 90 days, we still can be able to get a loan done for you. So you just have to be here legally in the United States to be able to get that loan completed. It's a great product that we have for people who work up at the U, who are students up at the U, that transition from being students and getting jobs up at the University of Utah and the hospital. We can be able to get those loans done for you. So if you know anybody who has been turned down or are worried about that aspect where they're not a resident, we can be able to get that taken care of. It's very, very easy. All we need to do is get a copy of the documentation that shows that they're here legally. It's that simple.
Yeah, that's a great program and a great opportunity for those, especially we were, because of the association with the University of Utah, we found that was something that was very beneficial. Again, back to the documentation, we're going to ask you about what where the funds for closing are going to come from. Are they coming from a gift? Are they, cash in your mattress? Are they, in your bank account? We're going to ask you all sorts of different questions to get to that. And lastly, we're going to talk about your credit report. We're going to look at your credit report. We're going to look at the accounts. We're going to check and see what your history has been. We're going to see if there's any collections or if there's any, like the bankruptcy, we talked about the bankruptcy, if there's any tax liens. There's a host of different things that can show up on your credit report, and we're going to look at those things. We're going to evaluate. We've even had situations where there's been names that have been, variations on their names, and maybe, those names have been used to get debts that people didn't know about. We pull a credit report and all of a sudden it shows up. So we go through that documentation pretty thorough and make sure that you just need to be prepared. We're going to ask a lot of questions. We get really good at that. So we have another question, looking to buy a home outside Utah State. Do you finance out of state? Oh, I wish I could say yes, but that is a hard no. We are not doing financing right now currently out of the state of Utah, but that being said, there are a lot of things that we have been able to do for our members to help them. Most of the time when they're looking to buy a home out of state, it's for an investment or for a secondary residence. And if you own a home here in Utah, we usually would suggest to do a loan against that home and finance it that way. We've come up with some other options. So, and if not, we can always help and refer you to a lender that helps outside of the state. I'm partial to credit unions. And so I always suggest to people the first thing that they should do is wherever you're looking, look into finding a local credit union there. You get better fees and better rates, and you definitely get a lot better service. It's a more personalized service. But unfortunately, we're not able to help outside of the state right now. But that's a really good question. Thank you for bringing that up. I have a question that I'm going to share with Taylor and then have Taylor answer. Should I choose an adjustable rate or a fixed rate loan? Will you address the differences between the two and some benefits?
Yeah. When we, as a credit union, we offer adjustable rate mortgages, and we also offer fixed rate mortgages. So when we go through trying to determine which avenue is going to be best for you, sometimes the adjustable rate mortgages can be a benefit. I was meeting with a gentleman earlier today, and he mentioned in the conversation just idle chit chat that he was planning on paying the loan off in 5 years. Well, that changed everything that we were taking a look at, because our adjustable rate mortgages are fixed for the first 5 years. The rate is in the mid threes right now. So we were able to calculate how much savings he'd have in the first 5 years, and it was around $11,000. So the adjustable rate mortgages are available. They can be something that can be useful for you on a primary residence if you're not going to be there long term. It's an in-house product. It's our money that we're lending to you. So they are something that we can be able to take a look at. We're not trying to put anybody into a box with what product we're looking at. We listen during the appointments, and we try and find the best product that works for you.
So just like what we've got, we're going to go to the next screen. Just like what we've got on this process, whoops, other way. And one more. The process that we go through as mortgage consultants with you, we make sure that we sit down with you and listen to what goals you have, whether those are short-term goals, whether they're long-term goals. Just like what Taylor said, when he sat down with a member and heard that the goal was to pay this off in 5 years, the additional savings that he was able to offer our member because of that listening and because of identifying what the goals were and what they wanted to accomplish, those additional savings can be realized because of that. So the process is, start the application first. Talk to one of the University Credit Union mortgage consultants. Make sure that you reach out to us, give us your situation, let us go through. Our job is to make sure that we give you lots of different options. And then your job is to go through those options and see what fits best for you. We are obligated to give you lots of options. That's our job. But we don't know what's going to be best for you. We can guess, we can say, hey, this sounds good, but in the end, it's your decision. So we just want to make sure that we're doing our part and giving you as much information as possible. Once we establish what's best for you, then you'll make application, we'll go through the process. So there's a few questions that we're going to address. What is the difference, Taylor? What's the difference between a pre-approval and a pre-qualified letter?
Well, that depends on what the person is asking for. So they're kind of interchangeable terms. When we go through and we're giving a pre-qualification letter or a pre-approval letter, there's a couple things that we verify. We always pull credit and we verify income. Those are the two things that we'll go through and make sure we have. We also verify down payment to know exactly where it's coming from. But on our pre-approval letter, it'll state that this letter is given knowing that income and credit have been verified. So we can be able to go through and calculate what you're going to be able to qualify for. We don't have to pull credit to have a conversation. If you had an 800 credit score and we know what your income is and know what your debts are, we can be able to go through and qualify and say this is how much you'd be able to qualify for with the information that you've given me. However, to be able to get that piece of paper with our signature on it on our letterhead to be able to give to a seller, or excuse me, to give to a seller, we would need to pull credit and we would need to verify income. So that just is an added level of security for yourself to know that you can be able to get that loan.
We get asked all the time about, can we get a pre-qualified letter? And we just have decided that we're not going to issue pre-qualified letters, so that we would rather go through the process and pre-approve you, and it's our guarantee to you. It's our stepping up and saying, you've made application with us, we verified this information, and we're going to stand behind this pre-approval. So it's just something that we do as a credit union. We've decided was more important to do the approval letter. Anybody can give you a pre-qualified letter. It's a pre-approval letter that you really want. So some things to consider, and you know what, we've got one more question that I want to make sure that we cover. What does the mortgage payment include? What are some things that are included in the mortgage payment?
Yeah, it depends on the type of loan that you're going through, but when we'll go through and we'll find out what loan and the type of home that you're going to buy, because there's different things that can be able to go into it. But the first thing is the principal and interest portion of it. That's just like any consumer loan. You have a rate, you have a term, you have a loan amount is going to calculate a principal and interest payment. The great thing I love about math is it's always going to equal the same. So we can be able to find out what the principal and interest payment is. That payment, as long as it's a fixed rate, will never change for the duration of your loan. Other things that can go into it, they don't have to. It depends on your loan to value and what type of loan you're doing. But taxes, county taxes need to be paid yearly. We can be able to do an escrow account at no charge to you. Your homeowner's insurance, depending on the type of property you have, is something that we'll have there. Also the mortgage insurance. If you put less than 20% cash down or you have an FHA loan, mortgage insurance may be required. So those are the types of things that will go into a payment. One of the things that I find that's difficult for people is when they start shopping online or they go to Zillow or something like that, it'll say a mortgage payment of X amount of dollars. That doesn't necessarily have all the information in it to calculate a proper payment for you. So that's why it's important to sit down with a professional who can be able to go through everything with all the calculators in front of them and say, this is what the payment would be with this credit score, this loan program, so that you can be able to have an accurate depiction of what your payment would be each individual month.
Thank you. I think that's really important to understand. So our next screen are just some things to make sure that you're considering, keeping in mind when you're preparing to purchase a home. Really keep in mind that where you want to start first, and we always try and encourage people, the first place that you want to start is set an appointment with a mortgage consultant. Make sure that you're talking to them first, making sure that you're running those debt ratios and being pre-qualified and communicating to the mortgage consultant so that they can tell you exactly where you're at, where you need to be, if you're not where you need to be, where you need to be, and the things that impact that. Some of the things to consider: acquiring new debt. Especially if you have made application and you are waiting to close on that, acquiring new debt can be the difference between closing on that home and not closing on that home. There are a lot of times that people forget or aren't informed, and they go out and they get new debt before they close on it, and all of a sudden they find them in a situation where they can't qualify. So we don't want that to happen. Our goal is to see you through this process and have it be a really good, positive process. And the end result is to get you in your home with the mortgage that suits you the best. Job changes can really impact that. Money, whether you have cash on hand, we get asked all the time, I've got, $3,500 that's in my drawer at home. Can I use that? And I would love to say yes, but the answer is no, we can't use cash. There are some creative ways to get around it, and there are some creative things that we try and help with. But in the end, cash on hand, you got to get it in an institution. You got to get it in the credit union so that we've got those deposit funds and we've got a history of them, and they actually have to be in there for a couple months. So just know that if you've got cash on hand, the better place for it would be to be in your bank account and where we can go ahead and track it that way. We'll talk about the credit cards and the source of funds. Where are the funds coming from? Are they gift? Are they, like again, the cash on hand? Are they in a savings account? Are you cashing in an IRA or other source of funds? And we'll talk about the credit issues. We've gone through the credit issues, but we'll talk about all the different things that can impact your credit. Collections, judgments, the bankruptcies, tax liens, all those different things can impact. And then if you've been involved in the divorce and there are obligations, financial obligations or other obligations, we're going to ask you a lot of questions. Again, it comes back to we're going to talk a lot and ask a lot of questions, and you just have to help us navigate through that process. And if there are things that you can answer, great. If there are things that you don't know, that's okay too, because we can work through that with you. One more question, or a couple more questions. The rate locks. What does it mean to lock your interest rate, and how and when do you do that?
If it's a refinance, you'll go through and know what the rate is at the time of the application. Most of the time, if we do an application, people will lock at that point. You don't have to. I mean, the lock is for your protection. It protects you that in the event that if the rate goes up, that you're secure with that. On the other side of that, if you do lock, then that's the rate that you're going to have. If rates do start to drop a little bit, then unfortunately you're at that rate. On a purchase, we'll lock the rate for the time frame that we need to. So if you're on a shorter time frame, sometimes locking a little bit closer to closing, the rate can be better. On the flip side of that, if you're building a home with a builder and you're 90 days out, we can be able to lock as far as 90 days out. And so a couple times I've been able to sit down with people and the rate has been the same, whether it's on a 30-day lock or a 90-day lock. So at that time, what we can be able to do is we can be able to go ahead and lock the loan so that they are protected and they know what their interest rate is. The most important thing through all of this is that if you have a question about something, you should get in contact with us. And so we can be able to go through and help you navigate life to make sure that this mortgage gets done for you. And so there are easy pitfalls that we can be able to avoid so that you can be able to get into the home that you're looking to get into. It's very, very simple just to have a quick conversation or a lengthy conversation and just make sure we get all your questions answered.
So another question, how much of a down payment do I need? We do have multiple different programs that help, especially with first-time home buyers. It used to be that you really only had one option. As a first-time home buyer, you could go with FHA. And FHA allowed you to put 3.5% down, and you had mortgage insurance monthly, and you had an upfront funding fee, and there was just a host of things, but that was really your only option. And that is just not the case anymore. There are so many great programs out for first-time home buyers. The credit union has come up with a program that we actually will finance 100% of the purchase price. You are responsible for covering the closing costs, but you can have the seller help with those closing costs. But there are great options, 100% financing, that's amazing. It's a great loan. It's something that we started the first of the year and it has become more and more popular. It's a great program. Also, there's an option for short-term mortgages. We've got some great short-term in-house mortgages. So it just really depends. The down payment, you can come in with as little and as much as you would like. If you've previously owned, there's a restriction, you have to have at least 5% down if you've previously owned a home. And we do adhere to that, but the first-time homebuyer programs, again, 100% financing. So it really just depends on the loan program that you're looking at that would govern what kind of a down payment. And again, we're going to give you lots of different options on that to see what fits you best. The last screen that we have, and I'm going to encourage some more questions if you have any more questions. The last screen just introduces, this is our mortgage team. We've got mortgage consultants right now in 7 different offices. We've got, or 8 different offices actually, 8 different offices. And you can reach any one of these if you just contact the 801-481-8840. You will reach us. You know where our website is. You found us on the website. The process of doing an application can happen a couple of different ways. You can do an application online, or you can do an application in person. If there's a branch close to you that we're not listed at, you just need to reach out to us and we will meet you at any one of the branches, whatever's most convenient for you. And it's just a reminder to you, we are a full service lender, so we do have the opportunity to do all types of programs. I don't believe that there's a mortgage program out there in the industry that we're not able to access and do. And so the first thing that you need to remember is to just reach out to us and help us answer some questions and then meet your needs. Make sure that we're doing what we can to help meet your needs and put you in a mortgage that's going to work the best for you. And we're going to give it just a few minutes to see if there's any more questions. Taylor, do you have anything else that you'd like to add?
One thing that we talked about with debt, if you are thinking about purchasing a home and also looking at other debt, I would highly recommend that you meet with a mortgage consultant. There's been numerous times where people that are making $15 to $20 an hour will buy a car, have a car payment $300, $400, $500 a month, and then they come in and they can only qualify for $120,000 in a mortgage. That's one of those things where we can be able to go through and talk to them about what's important, talk to them about how we can be able to structure their debt so that they can be able to qualify for the highest mortgage possible, or the type of mortgage that you're looking for. So I would just call and talk to us if you have any questions. If your kids, coworkers, anybody has any questions about a mortgage, just call and have a conversation with us so that we can be able to help you navigate the world of mortgages.
Okay, if we don't have any more questions, I think that's about all the information that we have to cover today. Thank you so much for joining us. We really appreciate it. Again, if you have questions, reach out to any one of the mortgage consultants. You will be receiving a follow-up email, just so that you know, you'll be receiving a follow-up email that will have a copy of this webinar recorded for you. In case you do have questions, you can respond back to that email, or you can reach it. It'll have contact information in that email as well. Thanks again so much. Hope you enjoy your afternoon.